you guys with your amazing charts and with your awesome questions. Everybody in this room is going to get one step closer to where they want to be today. That's the goal. Reminder, this is an educational room. The room is designed to teach you to read your T3 indicators. If you are with me from the funding company, wondering what's going on in here, pay attention during trading view, using the T3 indicators to recognize a trend trade, giving yourself an edge when it's time to enter the market. Let me know how I can be helpful. Another thing that I did, because I know we do have a lot of you guys in here in the funding company, as I cranked out a gold chart for you. So we'll talk a little bit about what the T3 indicators say with gold. We'll also look at the NASDAQ. And everything we do is going to be based around learning to read your charts, guys. Learning to look at your charts to recognize advantages and to turn those advantages into trades. Now, the first advantage that we give ourselves is checking news. Some people hate the rule that you're not supposed to trade during news. Some people, really the people that have been around a little bit longer, love the idea that you just don't even have to get in the market when it can be emotionally charged. That's what these red flag news events do. The ADP non-farm employment change was kind of a dud today. It looks like it was way lower than anticipated. And the market didn't react. So whoever was controlling the movement this morning didn't care, which is cool. That happens sometimes. At 10 a.m., we do have ISM services, PMI, has the potential to create spikes and jumps and bumps and all the things that mess up your great patterns. So knowing where it's at, leave yourself a little note. It's okay to not be in the market every second of the day, especially when it could disrupt the great things that you're looking for. Chart reading is always the goal, guys. And it's funny, haha. Chart reading is nothing more than recognizing a pattern. The market does the same thing every day. It always has. For as long as I've ever watched the market goes up or down, which means really you could either buy, you could sell, or you could wait. You're going to find that the waiting part is about 90% of your day. And I know that seems excessive. Until you actually have a plan that you trust, it's going to feel excessive. But when you know that every time you enter a trade, that trade is rooted in advantages, that trade is nothing more than a pattern that you can prove wins more than it loses, you really do start to embrace the 90%. And you understand that active trading is about 10% of the day. Once you get in touch with your chart reading, you're going to know three concepts. I'm speaking weird today. Maybe just one coffee too many. You'll understand where the market is likely to go, where it's likely to stop, and where it's likely to continue. Likely being the key word. I'm going to let you know right now, and this comes from a little Mark Douglas wisdom. You don't have to know what the market's going to do to make money in the markets. What you need to know is what probabilities are telling you. Is it a pattern that you can prove wins more than it loses? Is it a repeated movement that can create expectations? And guys, that's what we do here. You're likely to continue spots will be your great entries. Good morning, Miss Trina. Nice to see you in here. You're likely to go is going to help you set up targets. And finally, that likely to stop is what we call a termination condition. And these termination conditions can halt the forward progress of the market, ruin your good time, and you're going to see them long before you get there. So entries, targets, and that 90% are all going to become very, very clear to you. When I talk about the market trending, that's what it does. It's either up or down. Whether you are on NinjaTrader or whether you're one of my TradingView users, this is what we're going to be looking for. We're going to let the market establish a trend, give us our advantages. We're going to wait for a little fight, and it happens almost all the time. And then finally, your trade will be the resumption of that trend right from the spot where the market is most likely to continue. So whether you are NinjaTrader or whether you are TradingView, the methodology is absolutely no different. And if you can wait for that little fight. Pinpoint right where it's likely to be lost, guys. You can put yourself in a great position. As we move through the day, my morning is the same every day. Um, Learn the trigger line and Fibonacci rules for when it's okay to trade, guys. Learn what it means to have those advantages. It's only 3 rules on 2 charts. It's pretty simple. Everybody can simulate. Simulator is not trading. Simulator is building the muscle memory so that when it's time to trade, your body knows what to do. Your eyes know what they're looking for. Your brain knows what your advantages look like. Simulate, practice, make a million mistakes. I give you permission. You have my blessings, but post those trades in the room, especially the mistakes, guys, because every time you post in the room, you get a private session with me right in front of a couple other people. We will talk about what you saw. We'll talk about what you did. And if there's a way to do it better, I'll give it to you. I'll show you. We'll talk about it. If there's a lesson that needs to be repeated, we'll repeat it. And all you have to do is drop your picture in the room. So Victor dropped in the room, and I want you to see how he did it. Victor said, Mark, check it out. The trend is down, so I'm going to go down with it. Price is on the weak side of the triggers, which means I may manage a little more assertively. And I did have room to targets. And when price pulls back to an area, there's the fight and the downtrend. I'm going to wait for a close on the right side of the triggers to enter the trade. I'm going to get paid at treble. And Victor, that is a beautiful 9-point trade, which is $180 per contract on a 2-lot. Guys, this is exactly what you're going to learn on TradingView. And when we go through, the only thing that I can do is high-five Victor and say, Victor, you followed the plan that you have in front of you. Perfect. And that is how painless the feedback can be, guys. So post in the room. The people that post the most get to where they want to be the fastest. They recognize the mistakes they're making the quickest, and they get the coaching to fix it in the moment. The second thing is keep it simple, guys. Keep it simple. Everybody's heard that, right? The KISS plan, keep it simple. I hand you plans for both NinjaTrader and TradingView. I'm going to put them in the room right now. You military people, the last S stands for something a little different than I'm allowed to say in the room. Guys, the KISS plan is a stepping stone in your learning journey. The KISS plan is designed to teach you to read your indicators. And the trades within this plan are designed to optimize your chances of success, guys. There's a saying that says confidence comes from the memory of success. So as a brand new user, my goal, my job is to help you find all the success that's available, that's easiest to find. And then once you start learning to read your indicators, you're going to find a way to make a little money. You're going to find a way to do things beyond this very basic, dare I say, boring plan. But it's what you learn in the high probability trend trade that opens those doors for you. So keep it simple. Learn what your pattern looks like. What does it look like to have a trend trade? It's going to look the same every time. So study it. And the other way to do that is use the spreadsheets that I just dropped in the room. For NinjaTrader, this is all your rules being met in green. You're going to piece those rules together to create a trade. So it's 3 individual parts that get you in. The pattern, hundreds of pictures of the pattern presented by you in my room. And when they fit the pattern, they're put in here for study. How to enter, how to manage, things that you're going to see. Even a place to put all of your pictures. And then most importantly, guys, there's the trade tracking sheet. Both spreadsheets have it regardless of which plan you're using. And you can put a picture of your trade. There's how to annotate for the best feedback, how to do it. The links are right there with pictures to show you how to use this. But there's a section called feedback from class. So when you post in my room, and once again, Victor, you are my teacher's pet today. When you post in my room and we look at it and you follow every rule, not whether you won or lost, but if you follow every rule, you're going to be able to come back to your spreadsheet. Sorry. And you're going to drop that picture in there. And there's even a link in there to show you how to make it a hyperlink. And you might call it perfect. And over here, the feedback from class was, this is the perfect trend trade. This one is one for the plan, right? And now Victor's going to go, what does it look like when I want to find success? And he's going to go back and study this. And he's going to go, oh, that's the one. That's my pattern. That's what I want. And guys, it's awesome when that's the result of the feedback. But very often for the brand new user, and man, I've lived this one, you're going to see where your mistakes are. You're going to get feedback that says, hey, you traded into areas, or hey, you jumped in too soon, or perhaps even you didn't have what you needed to have the advantages that you were looking for. And guys, this is how you get better. It's not the winners. The winners are actually pretty easy to spot. It's recognizing your mistakes and then committing to fix them, committing to avoid them, committing to not let them become a part of your day. And the feedback will show those reoccurring challenges and victories that you're experiencing. Embrace and focus on the good, repeat the good, but also learn how to correct the bad. And this is where, when I was learning the software, John Novak saved my bacon, because when I finally posted in the room, it turned out I was trading into areas likely to stop the market. And he didn't just do the brother thing, hey dummy, stop it. He said, Mark, here's a great plan to avoid trading in those termination conditions. Here's a phrase you can use when it's time to look. And I'm telling you, that little bit of feedback, the courage to post a loser or two, set me on the path to getting where it is I wanted to be. So keep it simple, practice lots, guys, post in the room, flood the room with every question that you have. And let's start with NinjaTrader. 3 rules, that's it. That's all it takes. When a rule is true, it creates an advantage. So on NinjaTrader, the high probability trend trade, the trade that you can prove with your study typically wins 70 to 80% of the time, takes 3 things to bring it together. It takes momentum through rule number 1. It takes a clear path through rule number 2. And then defining your perfect entry, where that fight is most likely to be lost, through rule number 3. Good morning, Sergio. Good to see you. Now, I'm going to let you in on a secret. Don't tell the kids that aren't in the room. When you have the advantage of momentum and a clear path, I want you to get this picture in your head, guys, because you are a souped up semi, full turbo, and there is nothing in the way. This is the core to everything that I teach, guys. Momentum and path, once you understand this, you'll begin to find more ways to use the software. You'll begin to see the other trades that are available to you. So learn them individually and then piece them together to create the trade. It takes 2 charts to get you into this amazing trade. That's it. Everything begins on a large chart. And a large chart's a very slow chart. It's a broad stroke of a brush, if you will. And it shows the overall opinion of the market. It lets you know what the people in control want to have going on. Through the most current bar, and literally one bar, whichever one's got the motion on it, guys, you will be able to define the direction of the market, letting you know which way to look for rules to be met. You will have the advantage of momentum through rule number 1 if it's true, and you'll have absolutely nothing in the way, that clear path. No areas to be problematic through rule number 2. Rules 1 and 2 are met on a large chart. Those first 2 advantages, 66% of the good stuff, comes from 1 bar. And then inside of this bar, you're going to see the fight. You're going to see the bounce. You're going to see the continuation. And all of this is on a much smaller, faster refinement chart. And we use this small chart, this X-ray of the large chart 1 bar, because it's going to allow you to reduce your risk, and it's really going to put you in furthest from your profit potential, your likely to go spots, which is going to increase that potential for profit, guys. And we use these 2 charts, regardless of which platform you're on. Think about who's in charge, and go ahead and submit right now. It's not you. You're not the one moving the market. The market doesn't know you exist. So we're going to let the large crowd, which is represented on the large chart, we're going to let the institutions, the 1%, the man, the big business, whatever you want to call them, they're going to wake up and they're going to create a trend. And these are the people that are going to establish the momentum that you're looking for. These wonderful men and women are going to react at those key areas and fight one another for supremacy, and you don't have to be a part of that fight. The large crowd typically wins. But there's a small crowd. I always picture this. This is the kid whose uncle he never knew passed away and left him $1 billion, and he likes to mess with the market, right? He creates this little retracement. The small crowd creates a tiny push that goes against everything the large crowd wants. Rule number 3 on the small chart will have you pinpointing with pretty insane accuracy where that fight is most likely to be lost, and this will become your entry for the highest probability trend trade. Let the big crowd do their thing, guys. We'll take advantage of the small crowd when they lose. So we're going to use areas and triggers. These are the indicators. Here's your indicator review if you're new. Areas are going to be horizontal lines on a chart. Big chart or little chart. Areas are bouncy. Areas can create bounces and ricochets and fights between them. And they all have names. There's divergence, highs and lows. There's resistance and support. There's yellow 1-to-1s and even this mid-band. Now, when the market is trending up, an area like a divergence high, resistance, or yellow 1-to-1s, you can blanket term them. The market reached resistance. And if the market is in a downtrend, divergence lows, Fibonacci support, or yellow 1-to-1s are all blanketed. You could just say, hey, the market reached support. These areas will be used to define termination conditions. These areas will be used to define amazing entries. And all you have to remember is that areas are bouncy. And bounces typically stop the forward progress of the market. Now we're going to use triggers in everything that we do. I love my triggers, guys. There are small triggers and large triggers. 2 solid lines create your small triggers. They're a fast-moving average. 2 dashed lines create your large triggers. They're a slow-moving average. I have absolutely no idea the tech that goes into it, but the cool thing is I don't have to know how to build a watch to tell time. What I need to know is the difference between the two. When they're green, they're going up, and when they're red, they're going down. We're going to use trigger lines to define the momentum in the market. We're going to use trigger lines to define those termination conditions that could stop the market. And we're going to use large trigger lines to define our amazing entries. So triggers will show up in everything that you do. And all you have to know about them is that these are small and these are large. And now let's use triggers and areas, and let's define the best of the best. Let's define the highest probability trend trade Nexgen teaches. Let's talk about a trade that you'll be able to prove. Don't take my word for it. Typically wins 70 to 80% of the time. And everything starts on the large chart, and it must have strong triggers because strong triggers will give you the advantage of momentum. So on your large chart, first bar, and I want to do this because this is like a full picture. First bar will tell you whether or not you have momentum. So in an uptrend, when the background is green, small and large triggers must also be green. And in a downtrend, when the background is red, small and large triggers must also be red. That's how it works for the KISS plan. Now, if I'm looking at the very first bar, and I'll just do this, we'll throw that first bar up there. What it means to have strong triggers is the same both directions. In an uptrend, small triggers have broken above and away from the large triggers. Large triggers are widening, getting space between those 2 lines, and it's the little gap created. It's the space created between small and large. It looks like scissors that are open, ready to cut. Whether it's a little bit of space or whether it's a big space, guys, that's what defines strong triggers. And when strong triggers are present, the odds are favorable for the market to continue in the direction of the trend. So same thing, other direction. If we go to the first bar, watch this. And it's a little bit of space, but those large triggers are starting to widen. There's a gap between the 2, smalls below the large. Guys, that's strong triggers. The same way, it's strong triggers at the very end of the move, when there is still a little bit of space between the small and large. Separation is strength. That's my phrase. And as long as there is separation, the odds are favorable for the market to continue in the direction of the trend. And when separation goes away, we call those weak triggers. And weak triggers, instead of saying the odds are favorable, you're going to say anything can happen up or down. And that's not very confidence inspiring when you're looking for a trade. Well, I'm going to enter but I don't know if the odds are favorable for it to go up or down. It may reverse from the middle of nowhere. Guys, let it be very black and white in the beginning. You either have strength or you don't. Let's take a look at crude oil right now. Smalls are above the large. Space between the two. Can you guys give me a why? If that makes sense, that on the most current printing bar, I can say without hesitation that the odds are favorable for the market to continue up. Some of the people in the room call this Big Mo, and Big Mo is hard to stop, guys. Big Mo gives us the potential to break areas. Big Mo just sets us right. That's crude oil. It would be the same if you were looking at the S&P on the very first bar. My separation has gone away. I no longer have strength. Anything can happen up or down. Are you guys with me? That's your look. That's an example of both. It's either weakness, there's the NASDAQ, showing me strength. There's crude oil, showing me strength. There's the S&P, stuck in a moment of weakness. Probably going to eat some Haagen-Dazs and cry to a chick flick. So, strong or weak? Let it be black and white. And once you have strong, once you have momentum, once that market's going to be hard to stop, we're going to make sure that there's nothing in front of it, nothing there to create a bounce, nothing there to create a reversal, no horizontal line on the large chart, because areas, John is so tech, and I know he's in here, and it probably drives him nuts to hear me say areas are bouncy, but areas are bouncy. Areas can stop forward progress. Areas are where the large crowd are most likely to make decisions, where the buyers buy, where the sellers sell, where they fight one another to see who's going to take control. So in order to define a termination condition, step number one is let the price get there. So your dynamic Renko bars cranking up, feeling good, uptrend, nothing in the way, and then bam, they hit an area of resistance. And when they reach a line on the large chart, all you have to do, and this is the lesson John Novak gave me to fix my challenge with it. Ask yourself, where are your triggers? Small and large triggers. When price reaches Fibonacci support, divergence low, yellow 1-to-1s, where are your triggers? And if none of your trigger lines have made it through that area is a textbook termination condition. That area is an area that could do one of three things. It could reverse the market, and if it does that, we actually call it a strong top or a strong bottom. If no trigger lines get through and it reverses the market, it gives you a strong top or bottom. This is the best of the best, looking for trades the other direction. It's actually rule number one for the second trade on your plan. Now the market could also, buyers in control, hit the line, triggers don't break, sellers may attempt to take over, but the buyers aren't done, and the sellers really want to go, and the buyers aren't done, and you could get this crazy scramble right at a fib that you don't want to be a part of. It's an easy way to drain an account. Or it could, dun, 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 just smash like it didn't exist. And guys, it's going to be one of the three, and here's the cool thing. And I think this is cool. You may not. You'll never know. You'll never know what the reaction's going to be. So if price reaches a line and none of the triggers break, it's okay to sit on your hands and do nothing. Guys, this is going to be your 90%. But areas do break all the time. And it looks like this. And it's not price or the color of the fib. Your trigger lines will continue to tell the story on whether or not an area is broken or has the potential to break. So as the market is coming down and it reaches Fibonacci support, you're going to ask yourself, where are my triggers? Does everybody see that 1, 2, 3, 4, all 4 triggers are still above support? Guys, that's a textbook termination condition. That is the, if I'm not in a trade, I'm not starting a trade. My plan says absolutely not. More often than not, this is going to result in a loser, so I wait for the reaction. Well, if it's really going to break, my triggers will tell the story, not the price bars, not the color of the fib. If both small triggers smash through that area with momentum, remember, rule number one has to be in play, and two of my triggers, the large, remain above. 50% are through, 50% are not. This is going to set you up for the second trade on the plan that I've provided. But on the plan, because it's designed to optimize your chances of success, it is going to say that you need 3 of the 4 trigger lines below support. And when you get that look, that's the best look for a possible breaking of an area. But the area is not broken until all 4 trigger lines get beyond the area. So if the market is going down, all 4 trigger lines must get below support, and then support becomes resistance. Your path is clear. The first 2 rules are met until you reach the next line. And when you reach the next line, you go right back to number 1. You wait and see what the reaction is going to be. So we're going to count triggers. And guys, I gave you the PowerPoint that I used to teach every day. This is a great picture to memorize. If price reaches a line and none of the triggers break, that's your termination. That is rule number 2, absolutely, positively not met. Absolutely no trades into it. If 2 of the trigger lines break above with momentum, it does have the potential to break. And some of you may choose to go that direction later in life when you grow beyond the KISS plan. But if you're using the KISS plan, 3 trigger lines must be above the area of resistance. And it's yellow, caution. It's not a clear path yet, but that's your best look for a potential breakout. And this is one that you can take and manage assertively. But when all 4 trigger lines break through, guys, this is it. This is momentum, and this is path. This is angry trucker with nothing to the mountains, guys. This is a market that's going to be hard to stop. This is a market that is, the odds are favorable. It'll continue up. This is a market where there's nothing in the way to create a bounce. This is the best of the best. However, there will be times when your path is not clear. There will be times where there's multiple areas of support and resistance. And guys, this is 90% of your day. Can't take a trade. Rules say don't take a trade. It's a termination. Oh, it has the potential. Dang it, I hit another area. Whoa, it's got the potential. Egads, I hit another area. Guys, the futures markets trade on average $220 billion hourly. The S&P, which most of you are going to be trading on NinjaTrader, exchanges about $174 million a day. Now, I pull out the calculator every morning, and new users, pay attention to this. Base hits, pay bills. It takes $400 a day on average over the course of a 252 trading day year to make 6 figures. That's it. That's all. And I would wager to say very few people in the room are making 6 figures with their trading. Learn how to do it the easy way. Learn how to do it the high probability way. Learn how to do it the consistent way. And then guys, just take that easy money that you've learned how to make, mirror your accounts. You make the same 400 on 10 accounts being mirrored, high probability, it's $1 million a year. Hypothetically, I'm just me playing on a calculator, right? So you don't have to be the first one in, and you don't have to be the last one out, and you don't have to hope an area breaks. The easiest trades that you will ever take with this software, whoops, I'm going to my easy picture. It's literally labeled easy. The easiest trades you will ever take with this software will have momentum, perhaps from a reversal. Price will not have reached the next horizontal line on your chart, and you're going to pinpoint using a smaller, faster chart exactly where this tail is most likely to form so that you can capitalize on the momentum and path and hopefully ride it down to the next key area. Or if an area breaks, you can wait for the break, and with momentum, you will pinpoint right where this tail is most likely to form using a smaller, faster chart. This becomes your high probability trend trade long, and very often when the market's in a good mood, it may go all the way to the next key area. This is just a pattern. And it's a pattern that only takes these 3 rules, but it's imperative that the first 2 are in play because you want to make sure that you have everything good going your way. And when it is, this is where the magic happens, guys. This is where your friends are impressed, where children sing songs about you. You're going to go define where that small crowd, tiny little push against the major good stuff is likely to be lost. And I'm a language nerd. I'm going to let you know right now. And if you learn this phrase, and I'm going to pull this off to the side while I'm talking. If you learn this phrase, I will use a limit order, meaning that I'm literally going to be able to wait for the market to come to me. And I will use a limit order to buy or sell a pullback, and that pullback is nothing more than a tiny fight on a little chart that begins with a reversal bar. Good morning, 10K. And I will use that limit order to buy or sell the pullback at an area, at a fib, at a mid band, at a yellow 1-to-1, because areas are bouncy. And I will make sure that that area is inside of triggers. And this is what I wanted to do. I talk about language all the time. I talk about language all the time. These are your phrases to identify advantages. I'm not sure what subscription you need from TradingView to run Chart Prime 10K. I believe it is the premium. I was going to say prescription. I believe it is premium. Let me double check. Hold on. That's not what I need because that's just going to open up my charts. TradingView prices. And that'll typically take me to where I need to be. Premium is what you need to run like market flow and stuff. And I don't know which one you would need to run Chart Prime, but on Chart Prime, you're going to use not the expensive one, the cheaper one. And they do 20% off consistently, so it's about $50 a month. So Chart Prime Pro, premium on TradingView. All right, guys, rule number 1, separation is strength. Learn the phrase. It'll become easy to recognize. Rule number 2, price reaches, no triggers through, no trade. That's your phrase, keeping you out of trouble. Rule number 3, use a limit order to buy or sell a pullback at an area inside of triggers. And that will define the perfect entry and set you up for success. So when the large chart rules are met, when I have momentum, when the path is clear, when life is good, when it's going to be hard to stop, guys, I'm waiting for a reversal bar on a smaller, faster chart. I'm waiting for the fight. It begins with the reversal bar. The reversal bar is not your entry, my friends. The reversal bar is a small little loss of momentum that says, hey, you know what? The fight is on. Now you'll be able to pinpoint where that retracement is most likely to go using the large triggers, the dash triggers. There's 2 sets, one from the small chart, one from the large chart. And that market may retrace all the way to the very bottom of the triggers. You guys with me? Long trade. Your retracement zone may go all the way to the bottom of the triggers, most likely to go somewhere from the top to the bottom. You've defined the retracement zone, but triggers aren't bouncy. Areas are bouncy. You'll define your amazing entry by recognizing areas inside of triggers. So with that retracement, the highest point of support, in this case a mid-band, may create a bounce and continuation in the direction of the trade. But it could also very well be these 1-to-1s that create a bounce and send the market in the direction of the trade. And in some cases, they may overrun a little bit and get to the bottom of that retracement zone and then decide to go in the direction of the large chart advantages. Now, guys, all 3 of these are possible. Because you define the retracement zone, you know that your entry comes above it. And because the large chart has such ferocity up and nothing in the way, your entry, the rules say, you're in at the highest point of support inside of triggers, because it would be an absolute shame to wait for the market here only to watch it bounce above you and run without you. And because the methodology defines precisely where the market is most likely to continue, it has, in the same breath, defined where the market should not go. And where the market should not go is where initial stops are placed. Because if the small crowd can push through the areas likely to create a bounce, if they have the strength to blow beyond the bottom of their retracement zone, rule number 3 is no longer in play. Rule number 3 is no longer supporting your trade. This is where initial stops are placed. And anything that wins 70 to 80% of the time, it will hit this stop 20 to 30% of the time. Guys, you're not going to take, if you're following the KISS plan, entries from any areas on the wrong side of the triggers. This is the most basic approach, keeping you in the good graces of rule number 3. This is where the market should not go. And in a short trade, it's the same. The large chart will be in a downtrend. The large chart will let you know that the odds are favorable for the market to continue in the direction of that trend. The large chart will visually show you that there is nothing in the way to create a bounce. You wait for the small crowd. You wait for the fight. You'll be able to define right where the fight is most likely to be taken using those large triggers. You'll be able to define right where the fight is most likely to be lost using the areas inside of triggers. Your job is to activate a limit order just below the lowest point of support and wait for that small crowd to get there. And if they ate their Wheaties that morning and they blow through the area and through the retracement, you'll be waiting with a protective stop about 4 or 5 ticks beyond the triggers, right where the market should not go. Because that's where the advantage of rule number 3 is no longer in play. And guys, it's okay. It's not a catastrophic event to take a loser. It's just an amazing trade that didn't work. So rule number 3 defines where the continuation is most likely to occur. Your management, and this is in the KISS plan, has you putting your stop 4 to 5 ticks beyond those triggers. But there's even great news, guys. If you get a down bar in the direction of your trend, your KISS plan says your new stop is 2 ticks above that reversal bar. And if you get an up bar in your long trade, the KISS plan says your new stop is 2 ticks below that up bar. And it's not uncommon to see people in this room buy or sell the high or low tick. It's not uncommon to see people following the KISS plan take profits on the exact same reversal bar that reduces their risk. Guys, great entries create very manageable trades. And these great entries are just part of a pattern. When the large chart says up, when it at least has that potential to break, guys, the market is trading all the way up here. And you feel like it's gone without you. And then the reversal bar prints, and then it pulls back to the area inside of triggers. And suddenly, you don't only have 5 ticks to trouble. You've got 35 ticks to trouble. Suddenly, you don't have enormous risk. You've got the smallest risk with the highest accuracy. And you're using areas inside of triggers to pinpoint right where that tail is most likely to form. And when you have momentum and path, let's see if we can find one on the S&P. They've been kind of crazy. Here we go right here. With all the momentum, with at least 2 triggers through, guys, I'm not talking about KISS plan rules. I want you to see the pattern, and I want you to see that this pattern repeats itself repeatedly throughout the day. In the beginning on the KISS plan, I give you the highest probability way to catch it. With a little bit of study, with some practice, with some simulation, maybe some feedback, you'll begin to create exceptions to the rules because you understand the patterns. Does everybody see it? Momentum, potential to break, pull back to the area inside of triggers. Momentum, mid-band's not behaving as a termination condition because the triggers aren't a full bar away, pulls directly back to the area inside of the retracement zone. Guys, this is the S&P this morning. This isn't even me cherry picking stuff. This is me scrolling back. Here's number 3. 3 triggers through, all the momentum. Oh, they might have missed you by a tick and ran without you. Dag nabbit. That happens sometimes. But you guys see, the pattern is consistent. The pattern is predictable. The pattern is definable. The pattern is testable. And more often than not, you're going to find the ability, the potential to win, just focusing on one pattern. Pretty cool, right? Yeah, that's awesome. I can't believe it. How does he do that? Well, it's just patterns. Same pattern from November is the same pattern in 2021, is the same pattern in 2022. Learn your patterns. And now we're going to go to TradingView. And TradingView is going to introduce you to a pattern, to a methodology, to a plan that was introduced in 2004 and 2005 by Nexgen. The trend trade, the exact same trade that Victor took, that we looked at in the room earlier, 2004, 2005 plan. A trend trade was letting a trend be established, waiting for a fight back to an area, and re-entering to go with that established trend. This is what we do every day, guys. And TradingView only has 3 rules. If you're my prop firmer, time to get your ears on. This is like your cheat code. 3 rules. Only 2 charts. That's it. Why make it harder than it needs to be? Guys, your large chart is a 15-minute chart. It is a big, slow chart. It is hard to see change. It'll define direction, momentum, key targets, and terminations. It'll give you the big picture, the who's in charge and what do they want picture. Your small chart is a 1-minute chart. And a 1-minute chart defines the immediate strength of the market. And that immediate strength is defined by the small triggers, and it will define entry points right where the fight is likely to be lost, guys. And it's a pretty solid methodology, but it requires a little patience. Let's talk indicators. Your large chart, guys, I'm as right-brained as they come, and I stripped everything off of your large chart that isn't important, which means that there are no large triggers on your large chart. There are no background colors on your large chart. You'll see small triggers, which will either be up or down. Now, default, they come cyan up and white down. Make them any color you want. Make them hot pink if it makes you happy. Your small chart will have small and large triggers. And they're still just moving averages. And they can still be compared to one another to define momentum. But for the trend trade, you don't even need the large triggers. These are for the second trade on your plan. Both will have areas. Areas are bouncy. Did I mention that? Areas can create a bounce, can stop a market, can define an entry. So when you're looking at your rules and they say don't trade directly into areas, it means don't trade directly into something that can create a bounce. Now, somebody asked me once, Mark, what's the difference between trading directly into areas and trading to areas? Guys, if I have a closed door, let's make it closed door color, right? And I decide I'm going to run full steam to the right. If I start right here, I trade it into the door, probably going to break my nose. If I start back here, I've got room before I hit the door. This is what not trading into areas means. Don't trade directly into it. Give yourself room to make money. That's rule number 1. Rule number 2 says do the same thing on the small chart. I mean, my goodness, how many plans have 66% of the rules saying, please, for the love of fuzzy, give yourself room to make money? And then rule number 3 is defining where the fight's going to be lost, guys. You're going to buy or sell a pullback in a 1-minute area. But you're going to wait for a close on the correct side of the triggers. And that's the secret to the TradingView entry methodology. It keeps you from fighting the immediate momentum. So let's break it down. Trend trades go with the trend. Your small triggers on your large chart will either be up or down. And they should be decisive. If they are up, I'm looking for rules to be met for that trend trade long. And if they're down, I'm looking for rules to be met for that trend trade short. And if I can't tell which direction those triggers are going, neither can the large crowd. How could we possibly trade with a trend that we can't identify? So let it be decisive when you're trading this KISS plan. Next, rule number 1 says make sure you have room to trouble. Don't trade into areas. Wherever I'm going to enter that trade, I need room to make money. It's really a pretty simple concept. Rule number 2 says the same thing. From wherever you take your entry, make sure you have room before you hit something that could create a bounce, which means if you're going long directly into resistance is likely to ruin your trade. If you're going short directly into an area that could stop the market is likely to ruin your trade. And guys, a lot of times you'll see these areas define consolidation. So having room to make money, having room to your targets, guys, that's what it's all about. And once you have room, your entry pattern is the same way it is on NinjaTrader, guys. It's just a look. So in this particular instance, the trend is up. Everything's going up. Rule number 1 is met. The 15-minute, maybe the next area is way up here. The 1 minute, when I define my entry, I'll have room to get to trouble. Your pattern begins when the small triggers, that is not see-through at all, is it? The pattern begins when your small triggers roll down. My goodness, I'm going to mess this up every direction. There we go. When the small triggers roll down, that's the beginning of the fight. Once the small triggers roll down, I need it to pull back to an area. It could be this area behaving as support. It could be this mid-band. It could be these 1-to-1s. It could be these 1-to-1s. Guys, I don't know. I have absolutely no idea. I know that every one of these areas can create a bounce. You're like, well, Morgan, how do you pick your entry? I'm glad you asked. When I reach the area, I'm looking for one thing. I'm looking for a reversal bar up because I want a bar going in the direction of my trade. But I'm not just jumping in on an up bar. That up bar, that up bar must finish above the small triggers. Both corners above those small triggers. The small triggers are the immediate momentum. Your entry will put you in on the good side of that immediate momentum. This look is where the small chart is most likely to bounce and reverse into the direction of the large chart. So it's going to look just like this on your large chart. Cav, I don't think I've had any problems. Is it NinjaTrader data? Is it CME data? I mean, is it Tradeovate data from Apex? Is Apex having challenges? I didn't have any this morning. Sometimes the old repair, reboot, right on. One thing you can do, Cav, whenever I have a data issue, any sort of data issue, I go to Tools, Database Management, and under Database Management, I will reset the database and I will repair the database. And you do have to reboot NinjaTrader to finish that process, but a lot of times that'll clean up the little ugliness. So guys, you're welcome. When the large chart says up, not getting past the login. Master B, do you have a workspace open that when you open up NinjaTrader, that workspace is waiting for you as you connect? Does that make sense? Yes. So here's what I want you to do. Chances are, Master B, something corrupt in the workspace. So you log in and then it shuts down instantly, right? Oh, if it denies the login, that's going to be NinjaTrader. You're going to have to get with NinjaTrader for that one. Make sure your caps lock isn't on. Sorry. I have a cheat for a corrupt, but not for that. Make sure your caps lock isn't on. I've done that one once or twice. Does everybody see that the trend is up because the smalls are up? That's the first step. There's nothing in the way, room to targets. That's the second step. And guys, you've got to learn the entry rules so that you can define room to targets. Because rule number two says don't trade into anything. But it's don't trade in anything from where you're getting in. And maybe I need to rearrange those rules. Maybe I don't. Because the small triggers roll down. When these triggers are up, the fight is on. I start looking lower for areas. And when price reaches an area, and I get a close on the correct side of the triggers, that's my entry pattern. And it's the same every time. It's up, it's space, it's a fight to close above. And guys, if you don't have a pullback, it's not a trend trade. If your small triggers didn't roll against you, it's not a trend trade. So learn the language. Triggers are down. Room to trouble. Because my small triggers roll up, I'm looking for the higher area. My entry is a close below the small triggers from that area. And guys, they will try to head fake you every now and then and make you think that that's your entry before the area is hit. The rules say wait for an area because areas are bouncy. There can be 1,000 fights on the way to the area. This one had about 8 or 9 minutes patiently waiting for the entry. This one had about the same, 7 or 8 minutes patiently waiting for the entry, guys. One of the things about TradingView is it really does create a level of patience because when the triggers are down, bum, 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 and it pulls back to an area, if you have to wait for a close below, you've got to watch the timer. You've got to make sure that you're waiting for the close below. Guys, that was your close below at 93. It had 10 points to get down to trouble, but it also had 80 points of risk. When the market goes crazy, your 1-minute bars are going to give you thousands of dollars worth of risk. It doesn't change the pattern, but there's going to be a point where the risk just may be a little more than you're willing to accept, guys. So that's on you, whether or not you accept it. You'll know how to manage the trade before you ever enter the trade. So I said earlier, great entries create manageable trades. On TradingView, your large chart will dictate the path of least resistance on your trading or on your management. When you define the trend with the triggers, when you've said that there's room to trouble, just look, where is the most current price? 25, 480, 150. Is it left of the triggers, right of the triggers, or inside of the triggers? When you answer that question, you'll have an idea on how to manage. If you are left of the small triggers, whether it's up or down, they're working on it. Awesome, Master B. If you are left of the triggers, you're on the strong side of the triggers. And from the strong side of the triggers, the market tends to push a little harder. 1-minute areas are more likely to break. It doesn't mean break your rules. It just means that if you have room to that target, you may choose to see if it breaks. That's up to you. That's your management. If you're on the right side of the triggers, this is the weak side. This is where 1-minute areas are most likely to bounce. And the weak side of the triggers is where reversals come from. It's where babies are made, not really. But if you look at it on your large chart, from the weak side of the triggers is where the market started down. And from the weak side of the triggers is where the market started up. And from the weak side of the triggers is where the market started down. And guys, it's pretty cool. These just look like trades. They just look like trade entries on a big time frame. That's why we wait for the reversal bar. But because the 15-minute bars are so big sometimes, look at how big that thing is. You can go from weak to strong in one bar. But from the weak side, this is where my plan says, let's get paid at trouble. And then if you're not strong or weak, you're in transition. And if you're in transition, this is where split profits make sense. This is where maybe getting paid and getting to break even makes sense. And Trina, people will jockey for position before news. And look at that crazy large risk perfect trend trade. It won. So you'll see that a lot, Trina. You'll see the market saying, okay, there's news in 8 minutes. And we're gonna either push it up first so that we can sell it if it's bad news, or we're going to push it down first so that we can buy it if it's good news. And they'll literally manipulate the market to get them in a position in case the announcement is what they wanted it to be. And you'll see it on crude oil inventories as well, which is at 10:30 today. You'll see crude oil literally jockey for position. Look at that. Look how fast the NASDAQ is. Terrifying, right? NASDAQ is not for new users, guys, but the patterns still work with momentum and the potential to break. Still pulls back to areas inside of triggers. It's just about 10 times faster. And at 9:55, guys, it looks like they're running it up. So are there any questions about high probability trend trades? Any questions about the advantages? Guys, I harp on advantages so much. Because if you take a deep breath, if you slow down, if you really embrace the idea that momentum path and entry is the best of the best, guys, this is your high probability. This is where each indicator on every chart agrees with the rules for the trade. This is a trade that you can prove typically wins 70 to 80% of the time. This is a trade that teaches you to read your indicators. Guys, this is what builds your solid foundation to push you forward with the software. Once you can identify these three, you'll know when one goes away. And if one of your advantages goes away and you still have 66% of the good stuff, it puts you in what we call a medium probability trade scenario. And a medium probability scenario means that most of your indicators line up with the trade. However, a small issue exists. And guys, I think it's important to keep issue singular. And you may take these trades and you may manage them assertively. And you might get to a zero loss level a little quicker and taking profits a little faster because your chart read says it's not the perfect trade. And you will also notice when 2 out of 3 of your advantages goes away, or God forbid, all 3 of them. And you'll have to say to yourself, man, this is low probability. I'm in this as a business. I'm here to make money. My job is to win more than I lose. Why on earth am I even considering taking a low probability scenario? And guys, you're in control. And I love this about trading, and it took me about 3 years to realize that I'm in control. I choose when to enter the market. I demand that the market gives me what I want to take a trade. And what I want is a pattern that I can prove wins more than it loses. Because when you have an edge, when you have that advantage, probabilities takes care. It helps me make decisions on how assertively or aggressively I'm going to manage. High probability losing trade. It happens, right? It happens. So guys, focus on those advantages, right? Look at that. They drove it up, and now they're driving it down, and they are literally saying, hey, let's figure out what we're going to do. And we've got news in 2 minutes. You guys want me to leave the NASDAQ up for news? That'll be kind of fun. So as we go into the second hour, we're going to start doing the chart reads, guys. I'm going to look at the charts that have been posted in the room. I'm not going to play trade police. What I'm going to do is I'm going to go back to the very basic concepts. I'm going to go back to momentum. We're going to go back to path. We're going to go back to entry. And the only way that your feedback from me works is if you tell me, this is how I read momentum. This is what I thought of the termination. Here's the language I used to find my great entry. Did I do it right? Here's the direction I saw. Here's my room to targets. Here's the language I used to define my great entry. Did I do it right? And guys, if you go through that, if you give me that information, every time you post in the room, I'll give you everything in my arsenal, everything in my head to help you understand what you saw, what you did, why you did it. And here's the picture that I made the other day. Let me find it. Oh no. There it is. We still have 2 minutes. Your core is the high probability trend trade, guys. This is what I teach. There are millions of things that you're going to read on your charts outside of it, guys. The rules are taught for the high probability trend trade. Everything else discussed in this room is a chart read that's either helping or hurting those very basic rules. So at first, it's okay to not concern yourself with everything that could happen, but rather what is happening. Is it the best trade? And as you grow with the software, you will see more. All right, here's the NASDAQ. We're a minute out from news. You can see these guys reacting at areas, right? Boom, bam, bing, pow, weak triggers. There's a reversal. Weak triggers. There's a big ugly push. Weak triggers at a termination. Holy crap, it reversed the market. And now let's see what they do, guys. And when I come back, it's too fast. Yeah, it's totally too fast. It's untradeable, Cav. The NASDAQ is untradeable for 99% of the people in the world. Oh, look at it go. Whee! 4 divergences in the same price range. They're going to come back down, retest that divergence. Do they want it to go down? Oh, the buyers said let's go up, but the sellers said no. Let's go down, and the sellers take control. And now they're into Fibonacci support. Were there buyers waiting? Oh, there most certainly were, right there at that key area. They're trying to turn the triggers, but they haven't yet. Now the smalls are breaking above. Lots of trouble above, lots of sellers waiting. Oh, there's your reaction right off of Fibonacci resistance. Oh, and they're pushing and they're coming right back to where the buyers fought last time. But the sellers say, whoa, we lost our footing. The buyers stole our momentum again. The triggers are trying to roll. The smalls are above. It looks like a good bottom. Oh, but the sellers really wanted to go down, but the buyers really wanted to go up. Look at the fight. Oh my gosh. And the sellers are like, ha, we're going to go. We've established some momentum, but we're right at that key area. And the buyer said, for real, we want it to go up. And the seller said, man, I got a lot of money. Here's odds favorable in 2. Can we make it 3? Here's odds favorable in 3. Are we going to break the area? Oh, it sure looks like we are. Where's our next area? Oh, way down here. Sellers take control right to the pink 1-to-1s. Isn't this awesome? Look at them go. Go sellers, go sellers, go sellers. Buyers said, wait, all 4 triggers aren't through. Let's create a little reaction to mess with some people, maybe give someone a great entry. And the sellers are like, I don't know if you noticed the momentum, but we really want it to go down. And the buyer's like, oh, but let's make decisions. And the seller's like, we made a decision. Don't you see it? It's strong triggers. F you, buyers. We're pushing down. And the buyers are like, dude, all 4 triggers aren't through. We could still go up. That's just potential. And the sellers are like, man, I don't know how we can make it any more clear. Odds favorable momentum. We got 3 triggers through. This is the best look. We want that blue fib. We want to go to 25-120. And the buyers are like, fine. You guys are awesome. And there they go. Welcome to chart reading. That was kind of fun, wasn't it? That was awesome. And guys, what happens is when you learn to read your indicators, all of that crap rattles around your brain. And there is no, I think it's broken. There is no, I wonder if it's momentum. You can literally say, weak triggers, there's my retracement. Strong triggers, haven't made it through support. Gap theory, let's see if they come back to 25-115. Then they make a decision, and since it's a weak bottom, 25-102 is a pretty good one. Guys, when I talk about chart reading, that's what I'm talking about. When I'm talking about learning to read your indicators, that's what I'm talking about. When I'm talking about patterns that repeat themselves, identifying advantages, waiting for the best of the best entries, that's what I'm talking about. You can get there. That's fun for me. It really is. It's fun for me. I've been doing this a long time, so I'm kind of in tune with what's going on. All it takes is repetition. All it takes is repetition. You'll get there too. But now I'm exhausted. I'm going to go take a 4-minute nap. I'll be back in 5 minutes. And when I come back, we're going to click on all of your charts, guys. Go stretch your legs. Just qualified on your call. I don't make calls, Master B. You qualified on your brilliance. I do not make calls. I don't call trades. I don't tell you when to enter. I don't tell you when to exit. But I will read a chart. and I'll do it in my big boy voice. I'll see you guys in 5 minutes. All right, guys, I am back. So, a lot of movement in the market, huh? During news. Wasn't that crazy? Let's do the coolest thing ever, though. Weak triggers, reversal, straight to resistance, potential to break doesn't, gets to the one-to-ones, straight to resistance, back to support, right to one-to-ones, back to support, back to resistance, back to support, back to divergence high, and now they're pushing down. Guys, even during insanity, they know where these areas are. I can't stress that enough. This is why the rules create an advantage. And did anyone notice, and I'll check the tape and make sure that I'm being truthful. Did anyone notice that I never said the market will do this? I said my indicators are telling me that, right? The sellers are in control. They're at an area. The buyers are fighting back. I never said the market's going to go up or down, but we could talk about who was in control and what the likely outcome was based on reading the indicators. And look at that, weak triggers right at a fib. Whew, I'm getting dizzy. I can't watch it. That's too much. I'm going to click on the charts that you guys have posted. Let's not be the trade police today, guys. Let's take a minute and let's talk about the advantages on the chart. And let's take a minute and look at the chart reads. And if there's something that I can point out, I'll point it out. But remember, everything goes back to the core. Everything goes back to the idea that momentum path and entry, right? Establishing direction, nothing in the way. And then we'll do some chart reads because we're all going to grow. Everybody's going to get better at this as they spend time with it. So just because I say, oh, wow, that was a weak bottom, the mid-band may create a bounce, doesn't mean that it's a rule. It just means, hey, there's a chart read that you might be able to throw into the mix. That's awesome. Snuck one in on me. Um, here's the chart read that you may able. That was amazing. Who posted that? That was awesome. All right, Nathan, I'm going to try not to miss one. But when you piece them together like this, there's always the potential. If I do miss one, let me know. When you're doing 10 pictures, it's easier to put the screencast link in instead of copy pasting. You don't have to, but it does make my life a little easier because you've got like 40 pictures here, which is cool. We'll talk about every one of them, but they're not always easy to find. I just don't want to miss any. I think I may have just figured out how to fix that. Bum, bum, bum. Bum, bum, bum. I love this. For those of you that are new, if you see what Nathan is doing, Nathan is demanding the feedback promised by Nexgen to make him a better trader. And I think that is freaking phenomenal. Because Nathan's like, dude, paid good money for the software. It came with education. Let me take advantage of it. I like it. And it's okay, Nathan. I think I figured out how to do it. Don't worry about it. I figured out how to not miss one. I figured out how to not miss one. Every now and then I'm smart. All right, let's see what's going on. The 15-minute triggers are down. They're in transition, which means I've got a management plan already. There's a clear path. There's a pullback to an area. There's a close below the small triggers. And you're right, this is a potential area of support to look out for, and it does create a bounce. But then the market does everything the large chart suggested. Nice $550 trade. Well done, Paul. Guys, this is a take and manage. This is, I've got room. Everything's screaming down. There's nothing in the way. It's all of my advantages against one area that could create a bounce. And you might choose. I'm gonna break rule number 2 because I've got more going for me than against me. And the only thing that I say is that you're not allowed to be surprised if this area creates a bounce and takes you out of the trade. That's it. You knew it was there. You take and manage. Medium probability. Triggers are down. Transition. Clear path. Market bounces. Close below the small triggers. But you're in the zone. And Paul says, man, this one's gotten me before. I choose not to take this trade. I choose not to trade when I am right in an area that could mess things up. And Paul, look what it's already done, right? You can see that somebody knows. They tried to break it and couldn't. They pushed down and couldn't. And Paul says, hell, I'll let them figure it out. My magic 8 ball is busted. We'll see what they do. But with room to trouble, resistance, full party price below, and you just jump in, right? No, hold it. Look at this. Breaks, pulls back. This is a momentum trade, Paul. Smalls below the large, space between the two, quick little boom, bam, bing. Beautiful, beautiful momentum trade all the way down to trouble. That's the second trade on the plan, my friends. Paul, you did it like a rock star. Center stage, baby. Center stage. I'm wound up today, huh? Sorry. Same one. Same trade. We just saw it. I think I clicked it twice. The trade's so nice, I click it twice. This is John Novak's long entry. This is what I would have taken as an entry if I had entered, is this entry legit? Well, I don't know. Let's look at the rules. 15-minute up, weak side, clear path, pull back to an area, close above the small triggers. The only problem, Paul, so what's the only rule broken? And I'm going to tell you right now, when John Novak took this trade, this zone wasn't there. Because if you look at the trade that he took, I still remember it. This zone wasn't there. But that's it. You would be breaking rule number 2, right? So you would have to be okay with breaking rule number 2. Bounced, 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 bounced. How many times do you need to see an area bounce and still trade into it? So if that zone were there, doesn't fit the rules. But I don't believe that zone was there, which means that when you stack advantages, that's the perfect entry. That's the perfect entry that probably got stopped out. That's the perfect entry that probably got stopped out. That's a go 3 times. So it depends on when you looked at it. Great read, Paul. You got to stop asking me if it's legit. You got to put rules. Rules define whether it's legit. So Paul, remember the last trade you took short that looked exactly like this? Odds favorable, momentum, nothing in the way, break the area, snap back. That's your momentum trade. Look at the second trade on the KISS plan. You have a checklist for it. It's a momentum trade. Is it a trend trade? No. Your trend trade was down here. That's a momentum trade. That's the second trade. So this is a great example. I'm always right, except when I'm wrong. So guys, this is a great example. Remember when I said, and I say this kind of cocky, right? That when you learn the basics, and I don't care what it is. I don't care if it's NinjaTrader or if it's TradingView. Guys, when you learn the basics, the foundation, the kindergarten version of what we teach, you start to see stuff. And Paul, that's what you're doing. You know what a trend trade looks like. You know where a trend trade comes from. Hell, you even know what the expectation of a trend trade is. And now you're starting to recognize patterns that are kind of in the middle because you're not focusing so hard on a trend trade because it doesn't take that effort anymore. Does that make sense? Guys, this is growth. Because I understand momentum and direction and path, I'm beginning to see more opportunities with the software. That is my hope for everybody in the room. And Paul, you're doing a great job of it. Triggers are down. Not a clear path either direction. F it, I'll go up anyway, right? So on this one, I think the problem was I could not think fast enough and move profit targets and stop fast enough. If so, I would have ticks and not. So Paul, let's just do this. The triggers say down, right? And you went long. Not a momentum trade. Certainly not a trend trade. All this is oh shit, these say up, I hope it goes up. Does that make sense? Do you see the difference? Do you see the difference? Yeah. And then there's your short trade and all the way down to trouble. So you're trying to take the long to the short. Nothing wrong with that. You're doing it with momentum. You just didn't have very much room to get there. Like you were already there. And guys, there's a lot of you that'll do that. There's a lot of you that will take the long to the short. I'm not opposed to it by any means. It's a good chart read. So Paul, this is where you're starting to see more based on the basics. But every time you look at a chart, man, here comes the broken record. Check it out. You're going to like this. Or you won't. There's really no telling. So here we go. If this is the perfect trade, hold on. I love when I can go back to these three things. If this is the perfect trade, the direction is down, right? The path is clear. You've got an area that could serve as a trend trade. Paul, you know that you're looking good for the short. Does that make sense? So if you start your chart read with, holy shit, I have a short, and that short is likely to happen right here, then what you can do, Paul, is exactly what you did. That's the momentum that's most likely to get me to my short. Let me see if I can find a way to capitalize. But what it does for you, Paul, is it says that the second you hit that mid-band where rules are based and met for a short trade, you're going to GTFO because you know that your rules say that's where the short comes from. Does that make sense? So you do go back to the very core and it begins to open doors for you. Good job, dude. Great stuff today. I really am. I may have to switch to decaf. Loss is a case of not being aware of what I saw. So the 15 minutes down, weak side, and nowhere to go. And with nowhere to go, it went nowhere. That happens sometimes. You made a mistake, right? So Paul, what's a great thing that you can do that you've already said in the room before? I'm going to put a note. I wish, Ron. I'm going to put a note on my chart or on my desk that says before I enter is 15-minute clear. Because, Paul, we've identified the thing that's producing more losers and winner for you. Does that make sense? Because we've seen 3 or 4 of these over the last couple days. Dude, just write it down on a piece of paper, and every time you want to pull the trigger, glance down. Glance over. You'll be like, whoa, just a second. Let me pump the brakes. Let me wait until I've got a little room to make money. And guys, that's how the feedback works. It annoys my wife. I don't forget things. So you can post 100 pictures in my room. I'm going to know what your thing is. I'm going to talk to you about your thing. I'm going to work on correcting your thing with you. And Paul, that would be your corrective action. The same way I had to do it. It's the exact same thing I had. I had to write a note on my desk, and every time I wanted to take a trade, I had to talk about, well, is my path clear? Because that was killing my account. And Victor, this is the one we saw, I believe. Triggers are down. Room to trouble. Because the small triggers roll, price pulls back to an area. I get a close on the correct side of the triggers. Because I'm in transition, I choose to get paid at the next area. Great job, Victor. Good looking trade. Same trade. Moments later. Down. Weak side. Room. Price pulls back to the area. Closes below. Out at trouble because I'm on the weak side of the triggers. Do you guys see it? Victor did the same thing. 375. 240. So what is that? 615? If Victor shut it down at 615 every day for 252 trading days a year, it's $150,000 in the kitty before taxes and commissions, guys. Victor, outstanding. Follows the KISS plan rules to the letter. Oops, I clicked it twice. That's the same trade. Let's see. Triggers down. Strong side of the triggers. Room to trouble. Price pulls back to an area. Price closes below the small triggers. And you get money in the bank at the large triggers up. And after hitting the first one, you went to break even to protect the trade. And you're out with a base hit, 130 bucks. I was talking to someone yesterday about, hey, does the gap theory work? Guys, price returns to a moving average. A lot of times it will. It'll pull back to those triggers. And then it depends on what the market wants to do on whether or not they continue. So Victor, awesome management on a great looking trade. Yar. Here comes the pirate trade. Price reaches Fibonacci support. Absolutely no triggers through. And Ron says, well, not going short. And then Ron says, check it out. Divergence at a fib. That's a pretty good sign. Divergence again. Higher divergence. Oh my gosh, the small chart's telling me exactly what the large chart's telling me. I'm going to jump the fudge in. And I'm going to get out at trouble. And guys, this is using your chart read, waiting for change on the small chart when you can't go short anymore on the large chart. And making money. Absolutely, Adam. What's your study? Hold on. Are these 50-50 trades? What kind of trades are these? Are these 50-50? Or are these all high probability? Okay. Divergence, yes, winner. Divergence, yes, winner. Divergence, yes, loser. What part are we studying? That's a lot of winners. Is that all high probability? So you're saying 15 winners, 4 losers, 3,000, 78% winners, 84% winners on nothing but high probability trend trades. 92 and 78. And this is 1 week study, and it was legit high probability trend trade. It was 100% not fudging the rules to look cool, but 100% by the checklist. High probability trend trade? Well, Adam, I don't think anyone in the room is going to go search the market to look for your trades to verify your study. Now, what you could do is you could go back and take pictures of every one of those. You could write the rules on them, and then if you wanted to, you could present them in the room, and I'll look at every one of them. But I'm not going to go back and search markets on my free time to try to find your trades and guess your exact entries. Does that make sense? Is that fair? You do the work. Dude, I'll talk about every one of them. But 78 and 92, is there anyone in the room that couldn't make a living off those kind of numbers? I don't know anybody that couldn't. So, Adam, this is awesome study. And guys, when I say nobody in the history of the high probability trend trade checklist has ever been able to present me less than 70% winners when they follow the rules, Exhibit A. And it's usually around 83 is what I've found. Great job, Adam. Get those pictures for me, man. We'll talk about every one of them. Every one of them. But I can't go search them for you. Triggers down, room to trouble, close below, and it does. It pushes a little bit lower, and then they decide not to go. So great job, first profits, and then out with commissions. Great job, Paul. Good looking trade. Same one Victor took, 100%. Same one Trina took, 100%. Make money, stopped out even money. Guys, that's 3 for 3 in 3 different parts of the world. The exact same trade, the exact same entry, the exact same first profits, and either break even or a couple ticks out, managing the trade. That, guys, there's things that make me like giddy in the room. And when I see you guys all taking the same trade, when I'm watching you take the same entries and the same management, right? And saying, holy shit, this works. Let's work it. That excites me. I'm not going to lie. All right, Boaz. All the momentum. Yeah, for sure. Hey, Calucifer. Interesting name. Here you go. Bam. I won't even flash the image, man. I'll give you the Word document. And it actually even has pictures of what it means to have the rules met. No worries, man. Welcome to Nexgen. All right, so here is something. All the momentum. Nothing but room. Perfect entry. And then the second lower divergence was a great exit condition, Boaz. And you just held on a little longer than you really needed to. Can we agree on that? It was the perfect trade. And the perfect trade didn't work. And that was your failure point right there. Could have lost a couple ticks, but created a little bit of a hole for yourself. That's okay. You're an amazing trader. Trades don't win sometimes. Good management opportunity. It's hard to let go of that, though, isn't it? I gave away this morning $100 I shouldn't have, Boaz, because the second lower divergence printed, and I thought, man, but this is so good. And I did. I broke my management rules, and it cost me about $140 on that second contract. That's what we're all trying to overcome, right? Is inserting our gut feelings, inserting our emotions, inserting our hopes, and being just super mechanical. It was a great looking trade. Strong trending market, nothing in the way. Hold on. Hold on. This has got to be my buddy Ron. Because when Ron sees this, he's not the swearing sort, but he probably says, oh, heck darn, fudge. That's a market that's going to be hard to stop. Let me get below bouncy things and see if we can't make a little money. Great trade. Guys, this is called the chili dog. This is a trade that was invented by Ron based on momentum and path that says when my large chart is screaming with nothing in the way, I'm going to find a way to pull like $110, $137 out of the market. And because it's just momentum and path and not a trend trade, I'm a GTFO because base hits pay bills. Great trade, Ron. It is, hold on, odds favorable momentum, 4 triggers through. It is bad to trade right around the open. I don't know. I'm teaching a class right around the open, Nathan. So here's what you need to do. Are you ready? You're going to hate this. You guys hate it when I do this, but I'm going to do it anyway because I love you guys. And I don't want to just hand you fish. I want to teach you to fish. Let's see. There's the open. Relatively calm. Everything seems to do what it does, right, Nathan? Nothing crazy. I'm only going to do 2. There's the open. Relatively calm. Market followed all the rules, did everything the market suggested it may do, right? So Nathan, you're going to have to go back. You're going to have to go back and make that decision. And his question is, if I'm trading outside of normal hours, is it okay to expect different results? So Nathan, I'm going to do this for you. If you're trading when the market is open, the volume on the S&P might be around 74,000 contracts being traded. If you're trading off hours, It might be 30,000. I don't know. I'm making these numbers up. This one means that there's a lot of representation on both sides, right? There are buyers and there are sellers. And this is what creates the smooth. When you cut the volume in half, you cut away half of the buyers and sellers. So it's not unusual to see a market that spikes. It's not unusual to see a market that sits still. It's not unusual when these 30,000, half of them want it to go up and half of them want it to go down. And you see a market that's not open or pre-market or late in the evening just sit still for a while because it's two forces fighting one another with equal pressure. So it's going to be different every market. It's going to be different. Have you ever watched crude oil after 11 a.m. Eastern? No, watch it today. It's like watching paint dry. That's what happens when the volume goes away. That's what happens when the volume goes away. And there's two schools of thought, Nathan. There's people that won't trade right at the open, and then there's people that will. You're just going to have to make your decision. I'm always teaching class because what happens right at the open? There might be somebody waiting for 9:30 to dump $1 billion into the market to make it go down, right? And you never know. You never know. So I know it's probably not the best answer, but you could go back and study the open and see how long it's erratic, how many times, get a percentage, make a decision. Or you could just say, you know what? The market trades $174 million a year. I'm cool if I miss 5 minutes at the open. Good question. Good question. And then Victor says, I finally realized that there is plenty of trades all day. So if I miss one or spend hours waiting, a trade is coming for me with the rules met and no stress. It only took a ton of blown accounts to arrive at that realization. And that was pretty timely for, do I have to trade the open? Of course you don't. Of course you don't. If you're uncomfortable, if it creates hesitation or distracting thoughts, of course you don't. Strong bottom, odds favorable, only 3 triggers. There is your KISS plan entry. There is the KISS plan broke. There is the KISS plan broke. There is everything turning back in the direction with no momentum. And yes, that is a potential entry. Is odds favorable momentum judged at the start of the pullback or at the time of entry? Well, it's good all the way across, Nathan. I'm looking at it when I'm looking for an entry. That's really it. I'm looking at it when I'm looking for an entry. I want the smalls outside of the large. So I don't look for an entry until I've already gauged momentum, until I've already gauged path, until I'm coming over here and I'm saying, okay, where's my area? What are my triggers doing? And Nathan, we're falling into a little bit of a gray area, right? Some people may want them to stay green the whole time. That is so rare. Because to get back to the entry, very often there has to be a loss of momentum. But if they start strong and the area is going to hold, you might see a blip and then they may head right back up, right? You might see that blip on the way down and then they start to head back up. Good questions, really good questions. This is the stuff that everybody wonders, Nathan, but you actually ask. Odds favorable, clear path, you're in at the area, huge risk, right, Nathan? Huge risk, but it fits the rules. And where did it go? It went right to the mid-band from a weak bottom, and that's where it started back down to finish the look. So if you take this one, you've got to be prepared. Large triggers to find the retracement zone. Nathan, some people will do this. This is a chart read, not a rule. Some people will say, price loves to close the gap to the large triggers. Because it's a weak bottom, I'll force it back here before I try to enter. Some people will say that. Some people will say, it's perfect, I'll get in here and see if I can get to the mid-band and accept the risk. But I think when you know that it could, it may, it might, it could, right? Because it reaches it, that's how you know you're trading into it. So were you here for, am I trading into a door or am I trading to a door? From all the way down here, you've got tons of room to get there. You may not have been in the room yet. You had tons of room from your entry to get to 28, right? There it is right there. So you had room. The midband had never even been hit. Had never even been hit. The midband is not even a part of the equation at this point. Well, once it hits the midband, if it's not a termination, you might choose to hold, right? You might say, wow, they may go to the fib. Or, Nathan, you may say, because it's a weak bottom and that midband could create a bounce, I'm just going to get paid at the midband because the market has been screaming down for 1,000 points. And there's a good chance they're going to try to finish that move, right? So that's where experience and management comes in. Now, if you took the KISS plan, you got stopped out on the reversal bar anyway. No. So, Nathan, hold on. You're trying to go absolutes on me again. From a bad top, the midband is more likely to create a bounce. So let's see if we can find a midband sitting in the middle of nowhere. It's hard with the news. From a weak bottom, the midband area is more likely to create a bounce. That's all it is. From a weak top, the midband area is more likely to create a bounce and continuation. But it may not, right? Even if it's not the gap theory, weak top, it could create a bounce. So what does that mean? That means that when I see the market coming from a weak top and it gets to a midband, pretend the fibs weren't there. I say, oh shit, that midband might bounce and continue up. So if I'm in a trade, this spot right here is where I'm going to make sure something doesn't change on my small chart, right? Maybe it's a close above the small triggers. Maybe it's a divergence printing. But I'm not going to give it all back because I know that the potential is there. And there's your gap theory, right? Hit a fib, hit a midband, large triggers a full bar away. From a weak top, that's more likely to close the gap. Doesn't mean that it has to. So it's really more of a management thing. I'm just going to get my management hat on because I know that it could, that it might, that it may, that it has the potential to create a bounce. It also has the potential to get broken like it didn't even exist. So you have to make the decision on how you want to manage that trade. And that's chart reading, that's repetition, that's experience, that's recognizing a pattern because you're only focused on the perfect entries right now. Good stuff, Nathan. Is it a strong top? Is it a strong top? Large triggers are above resistance. All the triggers got above resistance. No, it's not a strong top. It's a lower divergence. No. So what's the language for a strong top or bottom? I love this because I go back to language. You've met me, right? I'm the language nerd. A strong top or bottom is first a termination condition. That reverses the market. It's first price reaches an area, no triggers break, and then it reverses the market. Does that make sense? First, it's a termination condition. Then it's a reversal. So Nathan, what's missing from the equation is first a termination condition. Exactly. It never was a termination condition. So now, Nathan, from a weak top, what can happen at a midband? This really came full circle. It can create a bounce, right? Great entry. Market comes down, so I'm looking for change. There's the higher divergence that creates the bounce. It's a great condition. It's not a rule. It's a great condition. It's not a rule. What are the rules for a strong top or bottom? They're black and white. It's not a strong top. What's the potential of a midband from a weak top? It could create a bounce. It did, didn't it? Right to resistance, where every trigger stayed below. And then the market dropped like a ton of bricks. Pretty cool, right? You're slowly seeping back into trying to throw all the nuances, Nathan. Momentum path, pull back to an area, failed. That's it. Perfect look that failed. But because you got the reversal bar, it failed fast. You might have made $100. Actually, if I'm not mistaken, Aaron yesterday made $100 on that one. It looks like the same trade. Yes. The answer is yes on this one, Nathan. You are a tick or two off of a moving average. Large triggers are a full bar away. Can we agree on that one? Weak bottom, mid-band area, large triggers away. That's the one to avoid. That's the one right there. Why? Because it's probably going to close the gap to those triggers. Why would I want to have 8 points? 8 points. You could. I don't have a rule. You'll have to make your own. It's a key area, right? The way the software works, Nathan, is it recalculates every 2 hours. So it goes back and it runs the tens of thousands of calculations again every 2 hours. And that's why we get fib updates. So you'll have to decide. And there's a great example. Strong bottom. Look at that. The midband didn't even flinch, did it? Midband just... Because look where it came from. You could re-enter. Second lower divergence. In with a new signal. You're absolutely right. Good job. Well, I don't have the ability to zoom in on yours. One large, one small is what I see. I reserve my right to be mistaken of what it looked like in the moment, but I see one line of the small through, and I see one line of the large through. And for me, what that means is that the car didn't make it through the wall. It's 2 lines of the small. Does that make sense? And Nathan, I don't know what it looked like in the moment. I don't know what it looked like in the moment. I see what you did, though. You're like 2 triggers, right? Both small triggers. And that goes back to this picture where when we talk about 2 triggers, I use the phrase, small triggers smash through the area. Good stuff. Small triggers smash. So it's one of each, but it's the small triggers smashing. Good stuff. I love it. So if you took this entry, if you're in at 51.50, hell, at 55.50, that's a $300 trade, Nathan. And then if you take the next one in and keep your stop where the market shouldn't go, you could have done it again, second divergence, exit, and then third divergence in the same price range. Great read. Does that make sense, though, on the midband? Strong bottom, it didn't really flinch. They found their bottom. And look at that, divergence, divergence, odds favorable. I love that first entry, man. That's beautiful. Odds favorable, nothing in the way, perfect entry, and 3 divergences for the exit, huh? So if you're in on the first entry, there's money to be made. Even if you get in on the second entry, There's money to be made. Nathan, this is a couple $100 using the KISS plan, using that great entry, that quick management, that break-even scenario. Great pictures, dude. No. How do we define a termination condition? What's the first phrase? Price reaches an area. That's it. You know it. Not even close. Hell, there's a fib in between them. Now, it looks like it may have gotten close enough to the fib. I can't tell. Looks like it was, well, it's still a full point off the fib. But it is the second lower divergence, right? Not a strong top. Unless you're saying divergence from the pivot a couple ticks below the fib. So Nathan, let's go through the read, right? It does not. Because for the brand new user, Nathan, and you're showing a shining example of it. For the brand new user, when you start throwing all of this nonsense into the mix, shit gets confusing, doesn't it? How many things are you thinking of beyond the very basics when you see this stuff? All of it. I know how your brain works now. I got you figured out. But it is getting wild because now you're trying to justify this. You're trying to create gray areas for this, allegedly, not because I think you actually are, so that you can take this because you saw this go to the fib. Does that make sense? So I'm going to give you the same praise that I gave Paul. When you speak in terms of advantages and keep it simple, you always go back to the core advantages to define your trade, right? That's the KISS plan, Nathan. Not the kill plan. Whoops. But what's the second part? When you no longer struggle to see the KISS trades, you'll see more. More opportunities, more entries, more patterns, and may choose to incorporate those into your plan. An example would be if I see a second lower divergence on the large chart and the perfect 50-50 setup, I am willing to enter that trade. And that's how plans grow, Nathan. So in the very beginning, it doesn't fit the rules, right? In the very beginning, it doesn't fit the rules. Why? Because I hand you a plan designed to optimize your chances of success, because I want you to feel good about what you're doing, right, Nathan? Remember yesterday when you posted like 7 out of 8 winners and the only thing you were looking for was that super strict KISS, and you're like, holy crap, this does work. Well, today, respectfully, you're giving it your best shot to go back to where you were already. After 1 day of success, you're already starting to fish the gray. It's okay to build a little muscle memory. Price is not reach an area. No triggers through. That's a bad bottom. Absolutely, 100%. And that's normal, Nathan, because you know that there's so much potential in this software. But you've got to learn to stay focused and very black and white, because rules are very black. Well, so let's talk about it. A 1-to-1, Nathan, is a 100% Fibonacci alternate. It is an exact, precise number, 100%. If it doesn't hit it, it didn't reach it. Divergence lows and highs are 100% precise, exact numbers. If it doesn't hit it, it didn't reach it. Fibs are made up of tens of thousands of calculations. You may get a little below or a little above. So, Nathan, everything to me is like, these are very black and white. Fibs Fibs have a tick or two leniency. Does that make sense? And remember when we talked about if I'm going to choose to let it running short of the fib, consider it a strong top, I'm going to look for telling indicators like weak triggers, like divergence, right? Maybe 4 ticks was the bottom of the range that created that fib. And I can see the divergence and I can see the weak triggers. I can even see my large triggers rolling, right? That says, yeah, they're probably not going to make it. That was probably as close to the fib as they want to get. Do you remember that lesson from the other day? Because here, see how they ran over? Just a skosh, right? So Nathan, you might get to a point where you're like, man, the 2 triggers barely went through. But I've got 3 divergences on my small chart confirming that that's probably a little bit of overrun. So if you want to call that a strong top, feel free. That's progression. But until you can run all of those calculations in your head in a moment to make good decisions, I hand you the plan that takes all those variables out. Faux show. I love it. Price stop. So we got this one, right? We got this one as well. Missed it by a tick, not a term. Cool. And what are they doing here? What time was that? So they get to resistance, they hit a mid-band, they pull back to resistance, they almost make the low, they go back to resistance, second higher divergence, can't get through. Do you see how the buyers and sellers are just fighting? Go toast a bagel. Guys, you can see that they can't get anything done. It's easy to lose a lot of money in those areas. Victor says, man, I love the changes to the statistics on the website. Now I can do the summary like Wayne, even though I have it on my spreadsheet. Awesome. So Victor says, thank you, Nexgen, for listening to us, for giving us the trades, for talking about the good stuff, showing me when I'm making money, giving me a chance to analyze it, letting me recognize my patterns, even knowing my commissions. Oh my gosh, Nexgen, you're the most amazing people. You're probably handsome and great dancers, and I am going to name my next kid after you. I mean, a lot of that's implied, right? A lot of it not really is said out loud. Victor, I love that, and I love that feedback, and I'll make sure John Novak gets that feedback. We have been so excited about getting this done for you guys, and we're stoked that it's there now. I like it. Odds favorable, strong bottom, pull back to the area. Does it fit? Yeah, it does. It does, Nathan. Did that one lose? See those flat triggers? Not a lot of conviction there. Always be aware, but it fits the rules 100%, black and white. Mid-band's not a termination. Strong bottom. Pull back to the area inside of triggers. It's everything you look for. Hell yeah, you could defend it in a court of law. Well, if we go back to the very basic lesson, and you guys know that I do this, right? When we define momentum, we close out the picture so you can't see it. And then we open a new picture that isn't momentum. And then we go to the right picture and do it again because, wow. There we go. Large triggers are widening. Large triggers are widening. That's part of the language to define. Someone said once flat triggers have no boogie. But all triggers, see, there's a good example. See how flat they are? Here, that's that, man, I don't know. There's nothing going on. Over here is beautiful. And right here is the beginning of that widening. So you're good. But if you see like 3 or 4 like this, where they just flatten out, or even better, when they're like this, and there's no space between the two, that's that red flag that it's probably not momentum. That was a great picture to follow that up with. Weak bottom, odds favorable, mid-band area can create a bounce from a weak bottom. And it did, didn't it? Does that mean don't take the trade, Nathan? No. It fits the rules, right? It's in the KISS plan. It was perfect. It was a perfect trade, Nathan. And it would have been a small little loser. But as you grow with the software, Nathan, you might say because of the weak bottom, because it's at the mid-band area, maybe I'll force them to give me a reversal bar. Remember when we talked about confirmation being a good thing and sometimes it's an unnecessary thing? This may be one of those times where you may choose to incorporate a little confirmation into your trade. I know the midband can create a bounce from a weak bottom. You know what? Right at that midband, I'll force them to start in the direction I want them to go. And that way I can put my stop right behind it and the small crowd's telling me they're back on board. Does that make sense? So perfect high probability trend trade entry. Same idea. Not really any separation in the triggers yet. And you can see it here. You can see how flat they are. Not even a gap. And because it's the weak bottom, and because it's the mid-band area, and because the large triggers are flat, do you see how it begins to compound a little bit? How you'll start to incorporate patterns, repeatable things. Yeah. And suddenly that's not your trade. Suddenly you're like, dude, I don't want that trade. That's kind of garbage. Good stuff. Weak bottom, mid-band area, flat triggers. Pretty cool, right? That's a good lesson because it goes right back to the very basic, large triggers widening. You want to see that space between the two. You want to see them open up. And that's what gives that advantage. Good stuff, man. Great, great pictures. Price stopped one tick away. Well, it missed the large chart, didn't it? There's your entry. There's your reversal bar. There's your second higher pivot. Never goes where the market shouldn't go. And it did ultimately make the area. Pretty cool, right? Didn't reach it. Perfect entry. Never went where the market shouldn't go. Because of the momentum, they made it to the 1-to-1, Nathan. High probability trend trade. Not yet, because what's the first phrase in defining a termination condition? Price reaches. There you go. Perfect. Perfect. You guys are awesome. Did you get anything out of that, Nathan? You going to walk away just a little bit better, I hope? I'm rooting for it. I'm telling you guys, those are the greatest lessons. When you guys say his job is to give me what I need, I'm gonna make sure that he gives me what I need, guys. That's when good things happen. That's when suddenly you start trading better. When suddenly you start seeing things more clear. So Nathan, gold star for you. Taking care of business. Taking care of business. All right, let me go through and read a couple comments. 10K just signed up with TV Chart Prime. Need to know all the basics and the videos that I can watch for how to play to be better on this platform. So 10K, here is the TradingView KISS plan designed to optimize your chances of success. And then from the Nexgen video playlist, I put together kind of a 60-second video series. There we go. For TradingView, a little bit about the reads and stuff. So there's a couple resources right in the beginning. Why is there price difference in TV and Ninja on, oh, I don't know, 10K? That was 2 minutes ago. Sounds like something's off. You probably have delayed data on TradingView, if I had to guess. Open up your TradingView and see if there's a big orange D somewhere up here. Sounds like you're delayed. Direction is down, transition, room to trouble, pull back to the area, close below, and then pulls back again. You get into the market and you're out at trouble. Keep trying to take more than the indicators say I should. You've gotten good at giving it back, Phil. You've gotten good at giving it back. Not a clear path though, is it? Traded directly into support. Can we agree on that, Phil? Traded directly into support without hesitation. And support didn't, let's see, where did it turn into? No, it didn't. That is resistance. They never break above, which means you could have been in a little better. I see how you wait for things to go down. And there it is. You can use Apex data on TV 10K. You can use the Trade of 8 if you have Apex accounts. I pay $7 a month for my data. Not a very big investment, seeing how this is what I do for a living. But yeah, if you're using Apex, you can. You want me to show you the challenge with Apex? How to link what? To buy it? Well, do you have Trade of 8? Is that what you're using? Sign into your Trade of 8. There it is. Perfect. Right there. That's all it takes. You're welcome. The challenge, though, with Apex on... sorry. Did you see that brain fart? So the challenge with Apex over here, and I'm not speaking ill of Apex, is that if you enter the market, and I'll go short, funding and paper trading lets you slide a stop loss, lets you slide a profit target. Now what Trade of 8 will make you do is put in a buy order to cancel out your sell, and put in a buy order to cancel out your stop. And if you want to take profits, partials, you've got to go through and change the count and put in another buy order. But here's the challenge, is if it hits your first target, you still have orders for 3, even though it's one contract. So you've got to scramble if they're close and change those. And I'll tell you right now, I reversed so many positions trying to trade Apex on this because I would take my profits and I couldn't get to my stop soon enough to change the counts. So just practice it on sim a little bit, man. It is a scramble. It really is. Triggers above the blue fib, clear path. Placed a limit order inside the triggers, not a rule. Area at the triggers. Placed 2 ticks below the yellow one. Who is this in the room? Help me out here. Cav, is this you? Oh, stop placed was 2 ticks. You know it's pull back to the area inside of triggers, right, Cav? You always say put a limit order inside the triggers. You couldn't have. It would have been hit. You got in on the way up, which means you either hit buy now or had a buy stop. A limit order would have been caught on the way down, right? Perfect entry, late entry, great results because of the large chart read. Sorry, the stop confused me for a second. Why would you put it so far below, though? Man, if those areas inside of triggers don't hold, that's a lot of room, especially with confirmation. Good stuff. Great trade. Great trade. Triggers down, in transition, enough room. Price pulls back to the area, close on the correct side of the triggers. All sorts of nonsense in the way, right, Pablo? Did you take it down to the large chart? Cool. Did you know that you were breaking rule number 2? Were you prepared to manage if it didn't go? That's the only question. Because any of these, especially, look at that, your triggers are even turning up. Any of these could have created a violent, ugly bounce. So this is where I say, hey, well, yeah, you were, but were you prepared to manage if it didn't make your target? Because it had already been there twice, right? And the triggers were already rolling and the smalls were already above the large. And the area already held pretty impressively. This is where I would say if I get in here and knowing all of this nonsense is in the way, I'm not using this pivot for a stop. No way in hell am I using this pivot for a stop. I know I'm breaking rules like 1, 2, 3 times over. I'm tight right behind it. So that's my only thing. Guys, if you're going to take it, be prepared to manage it. Good picture. I love it. Look at those fibs work. Whew. Oh, this is Miss Kathy. All right, so Miss Kathy, is it a clear path? Yeah, Boaz, that's a lot of mess on there. I have to ask you, Miss Kathy, is it really a clear path? You put a circle around it. Are you phoning it in, or do you really believe that 2 triggers through a divergence low is a clear path? Do you really believe that 3 triggers below a fib is a clear path? And it just affects management. Because when you don't have a clear path and divergence prints, it's a problem. And great management on the second divergence. I'm glad you got paid. But Miss Kathy, if you say, hey, this only has the potential to break, your management hat goes on pretty tight. Does that make sense? Potential on the fib, even less potential on the divergence low. 1 divergence is pretty problematic. 2 divergences is typically the kiss of death. So great management, way to get paid on a trade that isn't perfect. And why? Because great entries create manageable trades. You sold the high tick. How's that for a methodology? Good job. Good job. Whoa, it's already 11:13. How did that happen? All right, guys, I'm going to take 2 minutes, and then Nathan will start with yours when I come back. Boink. Look at that. Half a tick off. I consider that hit. I'll be back in just a minute, guys. Stretch your legs. Back at it. Here we go. Here we go. All right, Nathan. Boom, boom, boom. Let's open yours. Yeah, I figured out how to get them to load up like a reel over here. And then Boaz and Miss Kathy. And then that's just one. All right, let's take a look. Hey, Cav, have a good one, man. What does it mean if a fib prints after price passes it? It means that you had your fib update and new fibs were formed. That's it. That's just an update. See how it formed down here as well and see how it stopped up there? That's what your fib update looks like, Nathan. Every 2 hours, every 120 minutes, your software will recalculate. That's all. Nope. There's never anything to worry about. Ha, butt. I love it. Did you show me your butt? Strong bottom. 3 out of 4 triggers through. No divergence, but it's weak triggers, which means that a rule is broken. You choose not to take it, and it keeps you in the good. Great job, Nathan. Pretty easy, right? I have a checklist that tells me exactly what I need, and there's let's say it like that. There's not a million things around that checklist. There's not 1,000 sub-rules around that checklist, right? What if your area inside of triggers is not inside of triggers by the time price reaches it? Well, then it's not inside of triggers, right? Plain and simple. It's on the wrong side of the triggers. Why overthink it? Tell your mom, post your own charts. And without the look on the large chart, how could I possibly know if that was even the right trade? 2 charts, momentum, path, and entry. But if it's not inside of triggers, it's not inside of triggers. That's the black and white, right, Nathan? The language is unbelievably specific. So if you're not finding the success that you're looking for, do you want to keep taking trades from the wrong side of triggers? And Nathan, what if a frog didn't bump its ass when it's hopped, right? Why are you asking so many? Inside. It's one word. Inside. Not on, not near, not above, not below, not kinda, not sorta, just inside. Let it be simple. Let it be simple. Does it mean there wasn't a trade? No. Does it mean that you've got a great chance of taking a short trade from a mid-band on the wrong side of the triggers after divergence prints from a fib? Hell yeah, that's going to lose more than it wins. Congratulations. You have created a false sense of security, ditching every advantage that Nexgen teaches, and that luck is going to do wonderful things for you when you go live. Relay that message. Relay that message. It's all right. If they're all boring, Pete, we don't need all of them. That's okay. 4 triggers, clear path, perfect entry, didn't work. Rock solid, Nathan, just didn't work. It's going to be momentum and path, Pete. Momentum and path, momentum and path. I love it. What a great lesson. Guys, you're going to love Pete's charts. Let's see. Triggers down, 4 triggers through. Pull back to an area inside of triggers. Easy trade, right? Nathan, can you find anything wrong with that trade? I can't. It's perfect. It's easy. It's effortless. It's 3 rules on 2 charts, creating a great winner. Weak top, mid-band area may create a bounce. Trade didn't work. Does it fit the plan? Absolutely. Did the mid-band area from a weak top create a bounce? Absolutely. Maybe when I grow with the software a little bit, I'll choose to wait for confirmation. Maybe. Second link of yours was a loser. That's okay, Kathy. I love losers. Momentum, support, 3 triggers passed. And you try to get in just below Boaz. And with 3 triggers through, not really great momentum. Tail end of momentum. Not a lot of momentum on the small chart for a momentum trade. But everything going down, you said, I'll get in below the fib and hope it goes. And one of them went. And then you had a little giddy up on the small chart to help it. Not really a momentum trade because there's not momentum. This is really the, man, I hope those fibs don't hold look. Does that make sense, Boaz? Because how can you take a momentum without strong triggers? On at least one of the charts. John has been saying that for 20 years. All right. Momentum path and entry. 3 triggers through. Weak bottom, Miss Kathy. Huge gap. Did you catch the lesson on flat triggers don't have a lot of push? And also the lesson that from a weak bottom, 50-50 trades are less likely to work. And from a weak bottom, with divergence, that 50-50 is less likely to work. So, Miss Kathy, strong top or bottom is the one that I try to never do without. Divergence is such a killer on these trades that it's mentioned twice, and it is one of the management exit conditions. I think this is a trade that's a very avoidable loss because of the weak bottom, because of the divergence, because of the huge amount of risk that it takes to take it. Very often people will make the decision that there's too much wrong with this look to feel good about risking that much money on a trade. Does that make sense? So, and you can use the KISS plan to go back, and I like how you latch on to momentum path and entry the way you do. But you didn't have a clear path. And let me show you why this works. So let me take these 3. And let me go to your entry. And I'll show you what I mean on the entry here. So you had the momentum. And I feel good about that. I'll support that all day long. And you had the entry. I'll support that all day long, right? If we're in a court of law, if I'm your lawyer, I have to say, Your Honor, she was working without a clear path. And it was only the potential. Does that make sense on the large chart read? You did have momentum, only the potential to break, but you did have an area. So do you remember that divergence is a loss of momentum? Have you heard that phrase in the room before? Divergence is a loss of momentum. We're canceling out. That thing that we're leaning on to break that area is visually going away. See how your small triggers are below the large triggers? Boom. So when you go back to the KISS plan and you go to the wrong KISS plan, you're not going to get those rules at all. But if you go to the Ninja Trader KISS plan, Miss Kathy, we were working without a strong top or bottom. We were working without strong triggers. We were working with divergence. Do you see how if it's just a fight, right? If it's just a fight between good and evil, evil wins on this one. Cool. Checklists will save your bacon, my friends. And you can't treat a high or a medium probability scenario like a high probability scenario, or there will be avoidable mistakes on the entry. Is this an early entry, Boaz? Or your chart? Oh, we'll look when we get there. Sorry. Nathan. Four above. Perfect entry. And yeah, 44 probably would have got you. I agree 100%. And then the second lower divergence, if you took it with the reversal bar, probably would have got you again, Nathan. You determine whether it'll be 4 or 5. How do you feel about averages? Are averages precise? Moving averages, not really, right? Because they're moving. They're just averages. So 4 or 5 is just like, hey, you might, hell, Cav put like 12 on one because he loved the look. He said, I'm going to give this thing room to breathe. Remember that the KISS plan is the most remedial something to think about. Something to think about. Something to learn how to follow, to be consistent on. That's all it is. Good question. But yeah, that one would have got you a couple times. That was my morning, Nathan. I took the perfect trade 3 times before it went. Because it was perfect. And the assholes kept stopping me out. All the momentum from a strong top. Get in below trouble. Get out above trouble. Let trouble do its thing. Get in below trouble. Make money. I love it. Momentum all the way down. And Pete finds a way to get paid, leaving a fib to a fib, leaving a fib to a fib. Great job, Pete. Great job. Same thing the other way. All the momentum up. Quick little snap back to the mid band. Room to trouble. Giddy up, baby. Love it. Out at the first sign of trouble. My job's to get paid. Great job again. Hold on. More momentum. Nothing in the way. Get in below trouble. Find a way to get paid. Dang, Pete, this is boring. Momentum, path. Since the mid band is outside of the large triggers, waited for confirmation bar before entering. Because I can no longer define my stop, I'll force the market to go in the direction of my trade to see if they want to continue in the direction of everything good on my large chart. Guys, that is your right. Not perfect, but almost perfect. Good stuff. Everything's cranking, clear path, jump the fudge in, jump the fudge out. I mean, come on, Pete. Is it possible? Is it possible that when you figure these two things out, it creates a clarity? When you figure out that there's nothing in your way, you're a little more confident. I don't know, feels like it might be a true thing. Boaz, was it an early entry? It's a momentum trade, right, Boaz? Strong triggers, potential to break, strong triggers, snap back to the fib. It's actually a late entry if you're following momentum trade rules. Your entry was the pullback to the fib right there for the quick little hit. You let it start back down. It's a great entry. If you're following the momentum trade rules, it's a late entry. If you're like, man, there's a couple areas it could pull back to, let me force it to go the other direction. It's a very well thought out entry, trading that potential to break. And look at your small triggers. Do you see how they're still below, still red? There's nothing that says that market really wants to go up. And you capitalized on it beautifully. And then when you reached 11, right there, that's your termination. And you gave back $115 or about $125. So Boaz, I'm going to turn your chart into a lesson. I know exactly where the market could create a big ugly bounce. If you're willing to hold, hoping that it breaks, as soon as you get that reversal bar on the other side of the triggers, that's it, party over. And Boaz, I will literally chase a reversal bar marker. So right now, right, if I just jumped in, I'm hoping that it breaks. Whoops. Buy stop 2. I'm like, man, I hope it breaks. But if I get a reversal bar, it's not breaking. And it probably will hit our stop. But this way I'm not giving back like 7, 8, 9, 10 ticks. And there we go. Once you get the reversal bar, that's what signals the push. So it's one of those concepts you can use when you get to those key areas. That's what it's going to take to get me out if I'm trying to hold. And the strategy's worked well. And sometimes you get stopped out, and sometimes it runs. We did it once in the room, but see how it's the beginning of the end. And there's your bounce. No reason to get stopped out all the way up here. If it's really going to break, look at that. Right at it, reversal bar, bigger push. Right at it, no reversal bar, continues up a little bit. Reversal bar, no reversal bar at any of the areas, and sure enough, it continues down. That is such a good trick for pulling a little more out of the market because they just can't go up from the strong side of those triggers. Notice that it doesn't go up until we get that close on the other side, and then it's rock star all the way up. So that's a good pattern as you guys begin to build management plans where you're holding runners. Really does get you a little bit extra out of trade sometimes. Same thing here. If I'm thinking about exiting, I can wait for a reversal bar. And I might get an extra 5 or 6 ticks, but 5 or 6 ticks adds up. Especially if it's 5 or 6 ticks 2 or 3 times a day over 252 trading years. So triggers are down. Absolutely nowhere to go. Absolutely nowhere to go. Do you guys see it? It could break, but I don't have any indication that there's any room to go anywhere right now. And that's a quick read just to help out. What does gold say? Gold says all of my triggers down. If I get an entry from below that zone, right here at a mid band, well, then I've got clear skies for quite a while. So if this bar closes below, I have potential. That one didn't have any room. Rule number 2, keeping you safe. I can't go short directly into support. My rules say no. No longs for you when you see the 15 minutes. I agree, Boaz. I don't disagree at all. Boaz uses a 15-minute chart, the same one here. And Boaz says as long as these are down, I'm just not going to try the long. And so Boaz, the gap theory, a little insight into my world. What is that? That's gold. That's NASDAQ. So a little insight into my world. And it's a scary place. So guys, hold your... Let's see if we can find a gap theory to the downside. There we go. So Boaz, if those 15 minutes triggers are absolutely screaming, and I get that gap theory I'm almost there. Hold on. Right around 8, 9, 10, 8. So we're up actually a little higher. Man, the NASDAQ moves, doesn't it? There we go. 86, 106. That's not it. Let me make this easier. There it is. So right there, Boaz, 15-minute triggers are so strong. Large triggers are still down. Not a strong bottom. Pull back to that mid-band area. With those 15-minute triggers, I will almost always take a reversal bar from the area to try to continue down and close the gap, because the 15-minute triggers say we're more likely to go down than up. And then when it does this little pullback dance, I love it. And I love it, and I love it. And that's one of the ways that I use the 15-minute triggers. So right now they're down, but it is strong triggers up, and we haven't actually reached the mid-band yet. So I'm not really playing my gap theory yet, because it's right into 70. It's right into those one-to-ones. But from the mid-band, if they made it up, that would be one of those times where I would consider. That's not for new people. It was close, but yeah, it would have been, right, Nathan? Look at the large triggers. Look how far away they are. The pink one-to-ones are a termination condition too, because this is the NASDAQ. So even though it didn't quite touch the mid-band, the pink one-to-ones are textbook. And with the gap theory in play too, holy smokes. Couldn't pay me to go long up here. Now we've got the termination. Price reaches, no triggers break. It could go down, right? And it did, but my rules say no trades into a termination. All right, Nathan. 11:35 a.m. That's crude oil. Looks blah. That's what happens when everybody goes home. So when you talk about movement in the wee hours and stuff like that, that's the potential if the volume's not there. Cool. Three triggers through. I do have multiple divergences, and it launched above pretty quick, right? Isn't that awesome? Just no trade to be had there. Only three triggers, multiple divergences. Look what they did. And now it's momentum. From a weak bottom, pull back to the areas. It's at the bottom where the market shouldn't go. Man, weak bottom, mid-band could create a bounce, right, Nathan? Divergence. And now they're coming back down. Guys, this is why new users struggle on the NASDAQ. If you don't know exactly what you're looking for in the moment, 100%, they're going to run you over before you even know what happened. I took a momentum trade this morning on the NASDAQ. Boaz, you'll get a kick out of this. I sent John the picture because I was laughing so hard. So I was going for my momentum style trade, Boaz. This is where I literally had a stop limit to catch it on the way down. That's where I got filled. It was about 5 or 6 points. It literally added $200, $300, $400 worth of risk to my trade. That's when the volume is high. That's what the NASDAQ can do. Another termination, right? But the large triggers are down. Small triggers are up. Hit a mid-band. Don't even have favorable large triggers, so it's fun to watch. No momentum to push it up. Fun stuff. Guys, what do you want to talk about? What a great day. I'm going to go ahead and kill